15 years old. Yeah, my cousin just sent me this picture.
Okay.
Thursday.
Very good.
Yeah, so you start when I'm going to be good.
And this time I'm gonna say the time at the beginning. I don't. 2 minutes.
Get that way.
Good, all right. Okay, good morning, everyone, and welcome to NYCHA's Audit and Finance Committee meeting. Today is Monday, December 9th, 2024, and it is now 10:03 a.m. So once again, welcome to everyone, and we want to welcome our external auditor once again, Deloitte, who's present, and you'll be hearing from them during this meeting once again. So just another reminder to please place all of your mobile devices on silent. And if you're going to be speaking during the meeting, please use the microphone, make sure the green light is on so that everybody, not only in the room, but also watching online can hear you. The meeting's being live streamed, so we need to make sure everybody can hear. And we're now going to do our roll call for the record.
Good morning, everyone. My name is Anil Agrawal. I'll do the roll call. Mr. Victor Gonzalez,
Present.
Mr. Mark Kaplan,
Present.
Mr. Richard Koo,
Present.
and on my right, Anika Lescott Martinez,
Present.
David Sunshine.
Present.
From Deloitte, we have Jill Strohmeyer,
Present.
and from finance team, we have Amita Patel, Judith Francis, Ayat Lee, Pakon Ho. We also have Vilma Huerta, Special Advisor to the CEO.
Present.
Jason Goldberg from Law.
Present.
Thank you. And we also have some members from internal audit firm RSM. Clara Ewing.
Present.
I think Jennifer is not here, but Elizabeth Watts.
Present.
Aline Nieves.
Present.
Maria Perez. Okay, so thanks. We have the quorum for the audit committee members, the audit and finance committee members. So we can start the meeting.
Thank you, Anil. And just for the record, since I did not say before, I'm Cassie Ward. So the first item we have on the agenda is approval of the Audit and Finance Committee minutes from our last meeting, which was September 13th, 2024.
I move approval.
Okay, do we have a second?
Second.
All right, and sounds like we have everyone in favor, and so the motion is carried. Very good. Okay, moving on to agenda item number 2, which is a presentation of Deloitte's audit service plan for NYCHA's 2024 single audit. And I'm gonna turn it over to Jill.
Good morning, everyone. Thank you. So today I will take you through Deloitte's 2024 audit plan, our plan, scope, and timing for the audits, including the single audit for the New York City Housing Authority. So Deloitte has been engaged to perform the audits of the New York City Housing Authority's consolidated financial statements, the new NYCHA Public Housing Preservation 1 LLC financial statements. And then something new this year that I wanted to point out, we have been engaged to audit for the first time the New York City Public Housing Preservation Trust. It's a newly formed entity. I believe it's a couple years old now, but this is the first year that Deloitte has been asked to perform an audit over the December 31, 2023 results. We will be performing our audits in accordance with two sets of auditing standards. The first set of auditing standards is the generally accepted auditing standards issued by the AICPA, and the second will be government auditing standards. So just a reminder that Deloitte will plan and perform our audits to obtain reasonable assurance about whether these three sets of financial statements are free from material misstatement, whether caused by error or fraud. As part of our preliminary procedures thus far related to 2023, we have identified one significant risk. It's the same significant risk that we identified last year. And it's a significant risk related to management override of controls. Just to let the committee know, every audit that Deloitte performs, whether we're performing an audit of a publicly traded company, a government, a manufacturing entity, every one of our audits has this as a significant risk. And so we plan and then perform very direct procedures to address this risk. Some of those procedures include looking at journal entries that were made by management throughout the year. Do those journal entries make sense? Do they have a business purpose? Who's actually approving and posting those journal entries? For instance, we wouldn't expect the CFO or even the CEO of an organization to be posting journal entries. And so if we were to see something like that, we would look more closely at why and to understand the reason for that posting to be made by that individual. Another example of tests we perform around journal entries is review of, when are they being posted? Does NYCHA management work on the weekends? If not, then why are entries being posted on the weekends? And so we'll look for instances perhaps like that. But there are a whole host of different types of characteristics that we look for when we do our journal entry testing to specifically address this risk. Another procedure that we'll perform to address the risk is really taking a look at management estimates, understanding whether or not there are any bias when management determines assumptions that may go into those estimates. Ones that come to mind, your pension, your OPEB obligations, as well as your judgment and claims liabilities that are recorded. Most of those are actually all three of those have an actuarial component, so the management does use specialists, which is great to hear and reduces risk of bias. But we'll be looking at those throughout the course of our audit. And then lastly, to address the risk, we'll be looking at for any significant transactions that may have occurred throughout 2023. And significant transactions that happen to be unusual, something that NYCHA typically doesn't engage in, activities typically not engaged in. And we'll ask more questions around those type of transactions. These procedures, again, very similar to what we've done in prior years related to this particular risk. At this time, I don't have any other significant risks that we've identified. However, our audit plan is an iterative process that could change tomorrow if new facts and circumstances are presented to me. So if I do come across or we do determine that there are additional significant risks, I'll make sure to brief this committee on any changes. So other areas of focus that we'll have during 2024, we'll look at cash investments, debt, all part of your treasury cycle. Compensated absences, you'll hear more from Mr. Sunshine here in a moment around a new GASB that will be effective for NYCHA for 2024. And I apologize, I think I said 2023 before, but it's 2024 already, almost 2025. But you have a new GASB that will be implemented in 2024 related to compensated absences. So we will be spending some time this year looking at any changes that are needed and made to the liability recorded related to such. We'll continue to look at leases, understand if there are changes, modifications to leases, GASB 87, and now we're in our third year of implementation, so we'll continue to look at that. Pension and OPEB liabilities, again, very big balances on your on your financial statement, so we'll be looking at those this year along with claims liabilities. We will be looking at your tenant revenues and receivables, your subsidies and your grant revenue, your pollution remediation liabilities, of course, always a big item that we look at, spend a lot of time on each year. And last but not least, we'll be focusing on the new audit we'll be performing this year for the New York City Public Housing Preservation Trust. We don't plan to adopt a control reliance strategy, which will look at controls, we'll look at the controls in place by management, we'll look at the design of those controls, we'll look at the implementation of those controls. But we won't rely on those controls to reduce our substantive procedures. So we will be making detailed selections from your account balances and making certain we obtain audit evidence for the support of those transactions. Sure.
Is there a particular reason for that?
This is commonplace when a private company audit, in one where we don't issue, like in the PCAOB audit, you have to issue a report on internal controls. And so testing of operating effectiveness is something that's required to be done. And then ultimately when you test operating effectiveness and it's proven to be effective, then there are benefits to relying on those controls. But generally speaking, in private company audits, which this would be, your auditors are not taking control reliance for the purposes of their audit. Materiality, we will be setting a materiality for the performance of our audits. It's our benchmark is typically operating expenses, and we use a percentage of operating expenses to determine our materiality. Internal audit function, I know there has been some changes during 2024 related to your internal audit function and process. We don't plan to use the work of internal audit, meaning using folks from that team to help us perform procedures. We generally don't do that in a private company setting. But we will be having conversations with internal audit, understanding, maybe where they've focused their time during the year and whether or not that impacts anything that we do. If there were findings or issues identified, we would want to know about those if they had an impact on our audit. I'm the only one sitting here today, but I promise you that I have a whole host of people that support me. It's probably about 40 to 60 people strong, managers, seniors, and specialists. I do want to highlight a couple of specialists that I'll be bringing to the team again this year. We have actuarial specialist John Potts, who helps review assumptions methods related to pension and OPEB. I also have actuarial specialist Dan Leff, who will be joining the team to review assumptions and methods related to claims liability. I have an IT specialist also joining the team, Scott Maker. He was here last year. He'll be joining me again this year to look at your IT controls. And then we have valuation specialist as well. John Solomon will join the team again this year and reviewing your incurred borrowing rate related to your lease liabilities, as well as your subscription-based information technology arrangements, your SPEDA arrangements as well. And then you of course know Darshan Patel. He is the single audit specialist, will be back again this year. Reports, the reports issued will be very similar to last year, except the new report related to the new trust. That will be something you'll see for the first time this year. Other than that, the timing of the reports will be very similar to last year. Most of the reports will issue in June, and then anything related to single audit will be in September of 2025. This is a timeline, again, very similar. The only thing I want to point out as maybe a correction here, our documentation and assessment of some of the internal controls I was talking about, the design and implementation, we have those dotted here as a November, December task. That will actually be a February, March task. But other than that, this timeline is very similar to prior year. Peer review report. I can't remember last year if I shared with you the latest peer review report. I can't remember the timing, but in 2023, in November of 2023, Grant Thornton completed Deloitte's peer review report and ultimately issued their report on for Deloitte related to the peer review they performed for 2023. This happens every 3 years, so we have a grant come in every 3 years to review our private company audits, along with any policies that Deloitte has in place. They look at policies, controls, audits performed, they make samples of audits. And I'm pleased to present that Deloitte did receive the highest possible rating from Grant Thornton of a pass. I also wanted to highlight, I was actually selected as part of this process in 2023. Not this particular engagement, but I was one of the lucky New York managing directors to get selected and went through the process with Grant Thornton. And I also personally received the highest possible ratings of compliance. So just wanted to highlight that as well.
Good job.
And with that, that's my prepared presentation related to our plans, scope and timing for the 2024 audits. Happy to answer any questions.
I just have something just so that I can understand. Now, Gatsby, usually it's 100 is the general number for Gatsby's.
We're up to 104 now.
Exactly, so that was gonna be my question. Originally, I was reading somewhere where 100 is what they normally have that covers all the spectrums. I'm assuming that the controller can just add any kind of Gatsby after the 100 to, I don't wanna say suit, to look at something new from a different perspective. And they're allowed to do that.
Yeah, GASB is the standard setter for accounting pronouncements that a government must follow. GASB has a lot of projects that they're looking at now, and so they're gonna go way into the 100s, Mr. Gonzalez, as far as future guidance. And generally, it's usually because they see variation in practice. I will say that a lot of times they'll see one government recording an item one way and another government recording and reporting it a different way. And so when they see enough variation in practice, that's usually when they take on a project and try to understand whether or not they need guidelines that everyone can follow in the same way and manner. And so that's generally the reason that they have new standards. Sometimes that they follow FASB, if the FASB is the standard setter that for private companies, non-governmental companies. Sometimes GASB will see what FASB did and take a look and say, hey, should we be doing something similar on the GASB side? But yeah, there's not an end in sight. They'll continue moving into the 100s with their standards.
Okay, thank you.
I have two questions. In the last 2 years, have you seen any evidence of management override of controls in this agency?
Based on my test work, no.
My second question is this. In terms of the areas of audit, I remember, or I recall, reading in the newspaper, that one of the emergency contracts or sole source contracts was issued by NYCHA and approved by a deputy mayor within the last 6 months. As part of the, investigation that's going on, City Hall. Question, is that going to be, are you going to be looking at contracts as part of your audit? And how they were approved and so on?
Yes, so we do look at the procurement process, and we look at it very closely, especially as part of your single audit. And what Darshan's work is there, we look at procurement, we look at thresholds that you may set for approving various contracts, when you can sole source, when you have to go to bid, when you don't have to do either perhaps. So we will be looking at that. And Mr. Koo, you're referring to the incident that was brought to the press's attention last, I guess, February?
No,
Is that right?
that was the micro purchases, that was different.
That was something different, okay.
But there was some other issue that I heard about.
Okay. Maybe, okay.
Hi, Vilma Huerta, Special Advisor to the CEO. Just a point of clarification, that was not a contract done outside of the normal procurement and board approval process. The reason why they named the deputy mayor is because the deputy mayor sat on the NYCHA board and voted as a board member, not as a deputy mayor. So that's the point of clarification. So there was nothing
So it was a
done
regular,
outside of practice.
so it was a regular contract.
Correct, and it was voted on by the board.
Okay, so she was just one of several members.
She
of the
was a
board.
member of the NYCHA board
Yeah.
until she resigned
Thank
from
you.
the board.
Thank you.
Thank you.
Any other questions for me? If not, I'll pass the presentation over to Mr. David Sunshine.
I'm just gonna interject for 1 second before we turn it over, which is to ask whether there is a motion to approve Deloitte's service plan for the 2024 single audit.
So moved.
Okay, do we have a second?
Second.
All in favor?
Aye.
Okay, then the motion is carried, and now I will turn it over to Mr. Sunshine. Thank you.
Thank you very much. Good morning to the audit committee and all attendees. This part of the agenda will concentrate on recently issued GASBs. As Jill had mentioned, it's the primary source of NYCHA accounting requirements. And in the next slide, slide 2, we'll discuss 5 GASBs we're gonna be discussing today, 2 of which NYCHA plans on implementing in 2024, and 3 of which will be implemented in future years. And then we're gonna be going into each one of them separately. Slide 3, there are limitations and caveats to the following GASB presentation. The evaluation is still in process relating to both applicability to GASB statements and their impact. Management conclusions are preliminary and subject to change. And Deloitte, our external auditors, has not yet audited management's analysis and conclusions. The first GASB we're gonna discuss is GASB 100. Accounting changes and error corrections. It's an amendment of GASB statement number 62. 3 of them are changes, and 1 of them is related to corrections. There are changes in accounting principles, which we're gonna go into more details, changes in accounting estimates, changes to or within the financial reporting entity, which as Jill had mentioned, we're gonna discuss the trust as an example, and correction of an error in previously issued financial statements. The GASB's examination of how the prior 50-year standards, was a very long time of functioning, found certain things. That the governments and auditors needed clarification. It could be difficult to distinguish between an error correction and a change in estimate, which is very important, as we'll see, because an error correction requires going back, and a change in estimate is only done prospectively going forward. The requirements for single year versus comparative financial statements was unclear, so they clarified that, which is also very important to NYCHA since they issue comparative financials. More guidance for reporting entity changes were required. Okay. Now, specifically,
Excuse me,
yeah,
1 minute.
yeah, sure.
First item, it said governments and auditors need clarification of what?
of how to apply the guidance. There were gray areas in the guidance and they clarified it.
Okay.
I hope that answered the question.
No, but it'll go, it'll have to.
So as David continues, I think Mr. Kaplan, it'll be clear, he's gonna go into each of them to talk about the changes, and so you'll get a flavor. And please, if after the presentation, if you have additional questions, we'll absolutely continue to respond.
Okay, thank you. So now, going into the impact to NYCHA. First, we're gonna talk about changes in accounting principles, including but not limited to the implementation of a new GASB. We're gonna discuss right after this, GASB, 101, that's gonna be a new GASB, but you could also go from one acceptable accounting principle to another, as long as it's a preferable situation, which has to be documented. So we report the impact in both current period and retrospectively for comparative period shown. So, for example, in NYCHA's case, in 24, if we have implement GASB 101, we'll have to go back and restate 2023 for any effect. No significant changes to old standard. Minor changes include further clarification on how to report an opening balance adjustment resulting from a cumulative effect in accounting principles. Under GASB 100, the opening balance adjustment needs to be disclosed and segregated on the statement of revenue and expenses. And Mr. Kaplan, this was one example. This was a gray area. There was a divergence in practice of how to show this, and the GASB gave specific guidance on how to show it at this point. In addition, the transition guidelines from one accounting principle to another are now included in GASB 100. In the past, what happened is each GASB had a transition. This is what you have to do. Now, all the GASBs after 100, we will file the transition guidance that's given in GASB 100 for how to apply for the transition.
Okay.
Yeah, go ahead, I'm sorry. Yeah.
So when I was reading it, I saw, i.e., the net position.
Right.
So I tried to figure out how does that work and I looked at it. So I got two different meanings for that, and I was wondering if you could tell me which one is being applied to this particular issue, which was the difference between assets and deferred outflows of resources and liabilities and deferred inflows of resources.
Right.
That's one definition. Then I got the value of the position subtracting the initial cost of setting up the position.
Right.
So is that the same thing?
Well, the net position is really where you stand. And what happens is, for example, with compensated absences, just to give you an example. Let's say, based upon the current guidance, you come up with a greater liability. So that will reduce your net position. If you come up with a small liability, that will increase it. So what you do is, in 24, for example, you're starting with January 1, 23. So that change, that addition or subtraction, in the case, will be shown as an adjustment to your net position. It's sort of where you stand. I hope I answered the question.
Yes, in a sense, yes.
And Mr. Gonzalez, the equation, the first item you mentioned, that's the equation, how you calculate net position. So it's assets plus deferred outflows, less liabilities and deferred inflows, and that will get you to what is ultimately the net position. So that's the equation.
All right, thank you.
You're welcome.
Okay, now, next change that we're gonna discuss is change in accounting estimate. You report the impact prospectively going forward. No significant changes to old standard. Changes in estimates are inherent in various accounting transactions, including but not limited to underlying assumptions for the pollution remediation obligation, which Jill spoke about before. You're gonna come up with new estimates. It's a very fluid situation. Allowance for uncollectible accounts is based upon judgment, it's reevaluated every year. Incremental borrowing rates, etc. So that would be going forward. Now, the changes to or within the financial reporting entity could be applicable as a result of the addition or removal of a component unit or a change between blended and discrete presentation and requires that the primary government report impact in tabular form in both current period and retrospectively for comparative periods shown. While the trust we spoke about before, the trust was created in 2023. The ACFA did not reflect the trust's detailed financial data in tabular form due to a lack of materiality. The numbers were too small at that time. In order to comply with GASB 100, NYCHA's 2024 ACFA will disclose such level of comparative detail for the trust in the condensing combined statements within the ACFA notes. There were no other changes in component units, so we're gonna be showing both in tabular form the trust situation for both 2024 and 2023.
Excuse me. Could you spell out what ACFR means?
The annual comprehensive financial report.
I'd suggest in the future that be spelled out first before the abbreviation is put in, or put the abbreviation in as a parentheses following the full statement of what it is. Thank you.
Thank you. Comment well taken.
And what department are you in?
I'm in the financial reporting services.
So that's different from Mr. Lesnoy?
No, I'm one of his supporters.
So, Mr. Lesnoy had a family emergency. He sends his regrets, and so David Sunshine works closely with Mr. Lesnoy on the Gatsby pronouncement, so he's giving the presentation in his absence today.
Thank you very much.
Just one quick, so when was cause I'm noticing we're talking about the trust. So it's been in effect for a time. So when was the I don't know, from lack of a better term, the mistake that they were supposed to include it in a particular statement? Where was it that it was supposed to be, and where is it going to be now?
I can answer.
Okay, go ahead.
So the New York City Public Housing Preservation Trust was created by state legislation on June 16, 2023 by Governor Hochul. At the time of 2023, the organization was newly created, very, very little activity. But now in 2024, they certainly have activity, they have contracts, they have staff, and so we find it appropriate at this time. But as mentioned, in 2023, there was just a lack of materiality. There wasn't very much to report, given that it was a new organization.
So just to add, it was not an error, just to clarify.
Right, yeah, I was just,
Yeah.
from lack of a better word, I didn't phrase the question.
So pursuant to Gatsby, we're going to report in 2024 and include it as a component statement, and we're gonna go back and include 2023 as well. Even though it's small, we will still include it.
Okay, error correction is the next item under GASB 100. At a high level, new standards requirements are similar to the old standard, and their retrospective adjustments to prior years affected as required, which means you have to go back as far as the error goes. In addition, though, it is required under GASB 100 to make corrections for all years presented on required supplementary information unless it is impractical. Now, this was added, it could be very, arduous because there's a 10-year statement. So you may have to go back 10 years if we find an error. And the term impractical is, you cannot just say, okay, we can't do it, it's too hard. There has to be a good reason for it. Now, while material errors, corrections have been a rare occurrence for NYCHA, the requirement to correct all years affected will be burdensome. NYCHA is currently analyzing the amount of any potential errors in relation to its review of GASB 101 presented in a separate slide. That's the next thing coming up, and we're gonna discuss that in more detail. And again, as I mentioned before, we're planning on adopting this in 2024. Now we go to GASB statement number 101, compensated absences. The GASB discusses accounting for and reporting compensated absences consisting of sick leave, vacation, paid time off, parental leave, military leave, and other forms of leave for which a government employees receive cash when leave is used, or cash or cash at the end of employment, or non-cash settlements such as conversion to pension benefits. Number 3 is not applicable to NYCHA. The GASB reexamination of GASB 16 compensated absences, which was the prior standard, found variation in how governments were applying the standard. There were inconsistencies, changes in the form of leave governments provide that the standards didn't address, inconsistency within the GASB's authoritative literature, and certain disclosures which have been eliminated in GASB 101. An example of disclosures, they streamlined it, is you don't have to gross up anymore the changes, which is what was added and what was subtracted, you just give the net change to the liability.
How does this compare to what the city does?
I am really not sure, I don't know offhand.
The city of New York will have to adopt the same standard. The process that they may go through could look very different. And ultimately the liability could be impacted at a different magnitude. But all government clients or governmental entities who follow GASB pronouncements will have to adopt this standard. I think when the standard was first issued, I don't think there was a lot of focus on the standard itself, but now as governments are diving into the details of the standard, it's gonna be some work to really think through and analyze compensated absences. What does it mean for PTO versus vacation versus sick leave on an individual basis? And if you add in different union contracts, managerial, non-managerial components, there's gonna be a lot of time and effort spent not only by the accounting team, but also by likely your HR function to help come up with what this liability will be under GASB 101. But all governments, Mr. Kaplan, will have to adopt it, just not certain the magnitude at various governments.
I appreciate that, but I would be concerned to think that a major unit of the city like this one has a different standard it's applying in determining the liability.
And that they have to follow GASB 101, whether internal policies are different, I can't answer that. Like different HR policies or sick leave policies, that possibly could vary. I'm just not certain the city's policy versus what NYCHA has here. But everyone has to adopt the same accounting standard.
That's right, and so there are some changes and differences with regard to how different city agencies might do this based on their definition of sick time versus vacation time, different kinds of leave banks. And so your calculation has to be based on your specific circumstance.
My trouble is, apart from the technicality, it's one city. And the thought that different components are applying different standards and getting this put on the books is not comforting.
Well, I would say that we're all applying the same standard, which is GASB 101.
Oh, well.
Our actual leave policy might be different, and that's where you might see the variation. But everyone is applying the GASB 101 standard, as Jill was mentioning.
I guess if I were running something and it was under a piece of me, I'd have them all do the same thing the same way.
It's not uncommon in a general purpose government to have component units that have different policies. It's actually probably more common to have variation in the actual policies across like a large state or a large city as a general purpose government.
I'm a little bit, I just have a little question. I thought that sick leave and vacation time were built into the compensation through the salary. It's not a separate item, unless this is only for when people leave the city, that they get compensated for these things. Is that right? Is that the understanding? It's only when they leave, not when they're currently here.
I'm not sure I understand the question, Mr.
The
Cooper.
question is that compensated leave, reporting compensated absences, when you're sick and you're a NYCHA employee, you don't get money for that. That's just sick leave, take it off of your number of sick days that you have.
Well, at NYCHA, it's actually different because we
Oh,
have
it is?
one leave bank.
What?
If you're, for example, as a managerial employee, I have one leave bank, so sick and annual leave are all the same. I don't have a separate sick day versus an annual leave day. I can
Okay.
record it that way, but it's all the same leave bank.
But what I'm saying is that the annual leave that you get, there's no additional money that you get for that. It's just part of your salary.
When you're, if you leave NYCHA, or, you are paid out for the leave that you
At the
earned.
end,
Correct,
when you quit.
correct, and that's what
I think
this
I-
gets into.
I think I can answer that. Basically, what's happening is you have an accrual, right? Let's say the person gets 3 days a month. Okay, let's say he hasn't taken anything by the end of the year. So you have 36 days. That, on the accrual basis, that becomes a liability. You take it in the next year, you get paid in the next year, but that liability was set up in the prior year. And also, another thing that was mentioned is that vacation and sick are in a pool. There's one pool. We don't have separate sick leave. A lot of people that were very affected, a lot of governments, because they had different treatment of sick leave. Because they said, oh, it's not gonna happen, it's not probable, and we're not gonna accrue it. We don't have that situation. It's all one bank. So I hope that answered the question. But we're also gonna get into bonus leave, because upon retirement, you may have more sick and vacation accrued, which you're gonna be getting. That's also part of the equation. But on an ongoing basis, that's the way it always worked. As you accrue, there's a liability on the accrual basis. I hope that answered your question.
Well, it does, but I'm wondering, doesn't NYCHA, request people to take their vacation and so on during the current year?
We do not have any such policy.
So people could keep accruing it.
That's correct. We have, I believe, a limit of what you can get paid out when you leave. And that limit might be different for different employees, but you can accrue leave per the HR policies.
Really? Oh, thank you. Interesting. Thank you.
There are caps, and we're gonna discuss that in a minute. Okay. Okay, so the impact to NYCHA's compensated absences, accrued leave time consists of paid time off, which includes vacation and sick leave. As we said, it's one pool. Since there are no restrictions on carrying over unused leave, any unused leave is paid out upon termination of employment. NYCHA recognizes all PTO, paid time off, as a liability for compensated absences, subject to cap limits outlined in the HR manual. Additionally, the liability for leave bonus is recognized for all employees, subject to the cap limits outlined in the HR manual. As you were discussing, this is upon retirement. As you spend more time at NYCHA, after 10 years, you start getting a bonus retirement, you start getting additional bank to be paid out upon retirement. But that's also, again, there are caps in the HR manual. Liability is recognized based on more likely than not leave will be used or paid out as compared to previous standard of probable. All in all, there's no expected major impact of GASB 101. The old standard used the term probable, which means it was a very high standard, like over 80% or something like that. Now, they reduced it to more likely than not, which is over 50% basically. But as far as we're concerned, it's a lower threshold, so it's not gonna affect us, because whatever we had accrued we accrued with full Monty at prior years, we're gonna be doing that now. More likely is the lower threshold, so it's not gonna really affect us. Yeah.
I reveal my ignorance. What are leave bonuses?
These are, again, this is more of an HR thing, but after 10 years, you start accruing additional leave. And a half a day, a month, or whatever it is, and Judy Francis could probably chime in and discuss some more if we have to. But you start accruing more bonuses as you, till retirement. So that's what we're referring to.
Okay, thank
It's
you.
additional leave for longevity. Okay, parental leave, military leave, jury duty leave, other compensated absences that depend on the occurrence of a sporadic event are recognized when the leave begins, which means there'll be no accrual for those. Holiday leave that employees are required to take on a specific date are recognized when they occur. Okay, now in the process of our review, analysis of NYCHA's accrual for compensated absences, it was discovered that there may be some errors in the method of calculation of the liability, as well as potential changes in estimates. NYCHA is currently reviewing the effect of any such potential items and will adjust 2024 liability if determined material. This goes back sort of to the GASB 100 thing that Victor was talking about. There could be some errors. We haven't, pinned them down yet. There could be some changes in estimates. We have to look at it. As Jill said, it's a moving target. It's complicated, but we'll have to see what happens. The difference will be errors, if any, will have to go back. Estimates, changes in estimates will go forward. This also is a perfect thing, Mr. Kaplan, that we spoke about. Because, for example, in the HR manual, we have a new HR manual as of June or July 2024. There's been certain changes in managerial bonuses, the leave bonuses that we spoke about. They're being treated differently pursuant to the changes in the manual. So those will be changes in estimates. But that is something that you had brought up before. So changes in them, there could be changes in circumstances that Anika was talking about that could affect this liability.
Now, that brought up a different question for me. So, having reached his or her potential, accrued leave, bonus leave, and all of that, does that individual employee know exactly how much time he has to take before he leaves to in order to maximize how much money he's gonna get, he or she's gonna get?
So
Are
this is,
are they advised of that?
so this is really a human resources question, so I don't wanna get too far into that here, but I will say that yes, we do have a system called Kronos where every employee can look and see their recorded time, their leave bank and so forth. And if employees have specific questions about their accruals, that's something that they could discuss with human resources. But there is a system where each employee can check that.
I understand the answer, so I'll ask a different question. What if they don't know that they have to ask that?
Well, that's not thankfully affecting the financial statements.
Got it. Okay.
Question,
Yeah.
is overtime included in compensated leave?
Not generally, no, because then again, that's fluctuating. You wouldn't know.
But
It's
it's still a
only fixed.
liability, isn't it?
Overtime would be part of normal salaries and wages, so.
So employees get their overtime as part of their regular, as in addition to that regular salary.
Correct.
Is that correct?
It's not considered a
And it occurs
compensation.
during the current year, it doesn't, it's not brought over until the end when they retire.
Correct. If there's overtime generally from a financial statement perspective is looked at the end of the year. So if your payroll dates and while the payroll cycle, I guess, spans 2 different fiscal years. So if, like, for instance, if your payroll start date is December 28th and then goes into January 4th or 5th, you're spanning 2 different fiscal years. If there's overtime in that 1 week period, that's the time when you're going to see in your financial statements another liability for the overtime during those couple of days at the end of 2024. Otherwise, throughout the year, it is not a concern from an accounting perspective.
Again, as we mentioned before, these two, GASB 100 and GASB 101, we are planning on adopting this in 2024. GASB number 102, certain risk disclosures. State and local governments face a variety of risks that can negatively affect the level of service they provide or their ability to meet obligations as they come due. Although governments are required to disclose information about their exposure to some of those risks, essential information about other risks that are prevalent among state and local governments is not routinely disclosed because it's not explicitly required. In other words, there are requirements now, and we do have risks disclosed in the footnotes, but this GASB expands on risk. The objective of this statement is to provide users of government financial statements with essential information about risks related to a government's vulnerability due to certain concentrations or constraints. Concentrations in this GASB is defined as diversity related to an aspect of significant inflow or outflow of resources. An example is a workforce covered by collective bargaining agreements, which obviously NYCHA has due to the multiple union contracts. Now, constraints are where you have external parties that could promulgate rules as to what you have, such as HUD, or the government itself, the highest level of decision-making authority. Examples, limitation on incurrence of debt. Again, HUD could have limitations on debt, on what you can invest in. So these are new things, new risks that are gonna have to be disclosed. Impact to NYCHA. NYCHA has not completed the process of evaluating the requirements of this statement. While NYCHA currently discloses a variety of risks, credit risk, interest rate risk, concentration risk, custodial credit risk affecting its deposits and investments, as well as other risks, additional disclosures may be required under GASB 102. And this is planned adoption is 2025.
What, to get some sense of what might be a new risk here?
Well, I think we spoke about it, such as, we gave a couple of examples in the collective bargaining, or if you have, let's say, a limitation on borrowing. There are a lot of constraints that HUD could have that could affect our cash flows, money coming in, how you spend. There's new risks that have to discuss spending ability, what you could spend on.
And they may not necessarily be new risk, they're just going to be
Yeah.
new disclosures
Right.
within the financial statements. Again, when I'm reading this, this is, to me, really being driven by users of the financial statements and what they want to know about, and risks and uncertainty is something that I think most users care about. And so not necessarily maybe something new to the organization, but now it's going to be explicitly disclosed within the footnotes. And there'll be some judgment calls. Management will have to go through a process to understand exactly what's material, what's important to be disclosed under the standard.
Thank you.
And again, the planned adoption is 2025. GASB statement number 103, financial reporting and model improvements. Objective of this statement to improve key components of the financial reporting model to enhance its effectiveness in providing information that is essential for decision-making and assessing a government's accountability. This statement also addresses certain application issues. The statement covers a broad variety of financial reporting issues. We're gonna, give some examples below. Impact to NYCHA. NYCHA has not completed the process of evaluating the requirements of this statement. However, highlights of certain potential changes include but are not limited to added structure to the MD&A, incremental disclosures for major component units on the statement of net position and statement of revenue and expenses, and comparison of actual results to budget with variance explanations. I just want to point out that number 3 may not be applicable to NYCHA because we don't have a legally determined budget, and this requirement only applies where you have a legally determined budget.
Excuse me, sir,
Yeah.
what does MD&A stand for?
Management's discussion and analysis. Again,
Management what?
management's discussion and analysis.
Oh.
We'll have to spell it out. We'll make a note of that.
Okay, thank you.
Okay.
And Mr. Gonzalez, these are some of these 103 and 104, which Mr. Sunshine is going through, are examples of really GASB taking a look at, for instance, GASB 34, which was issued in the early 2000s. So we're now 20 years later, and times have changed. We're moving forward, and they're reassessing some of the prior standards to determine whether or not edits, corrections, clarifications need to be made, and you're seeing those come out, I think, in these last standards we're talking about here today.
A lot of changes.
As Joe mentions, before they issue a GASB, they go out, issue an exposure draft, they ask for comments from the governments, and they gather a lot of information. But this one apparently took them 20 years to get around to it, but eventually they did.
Think of all the money you save by not having to do it.
Yeah.
I've always wondered about some of these changes, if anybody when they put in place, figured out the economic impact
Right.
in terms of just paperwork.
Well, maybe they'll come up with a GASB for that, so. Okay, this planned adoption is 2026. Now we have last but not least, GASB number 104, disclosure of certain capital assets. State and local governments are required to provide detailed information about capital assets and notes to financial statements. Statement number 4, basic financial statements and management discussion analysis for state and local governments requires certain information regarding capital assets to be presented by major classes. The objective of this statement is to provide users of government financial statements with essential information about certain types of capital assets. Now, NYCHA has not completed the process of evaluating the requirements of this statement. We're planning on adopting this in 2026. Just to give you a few examples, and this really, GASB, is not a heavy lift. We have already implemented a lot of this. If you remember, a year or two ago, we adopted GASB 87, the leased assets. Those are separately disclosed. We have subscription and assets recognized under GASB 96. Subscription-based IT arrangements. So those will have to be separately disclosed. And capital assets held for sale is a new requirement that will have to be, this is not a heavy lift, this is gonna be basically a simple assignment for us. And the planned adoption is 2026. And with that, my presentation is over. Any additional questions?
Okay, thank you very much.
Thank you.
So that actually concludes our business.
One little note,
Yes.
congratulations to Jill for her award.
Yes,
For the,
Absolutely.
yes, good job, Jill.
good job, thanks.
Your pass.
Thank you. Okay. Any other business before we wrap up? Okay, so there being no other matters to be addressed, I wanna thank everyone for their attendance at this meeting, and it is now time for a motion, to adjourn the meeting. Do we
I
have?
move it.
Okay, do we have a second?
Second.
All in favor?
Aye.
Alright, very good, with that, the motion is carried. It is now 11:02 a.m. So typically this is when I say when the next meeting is going to be, however, we don't have the 2025 schedule yet. Usually the first one is in April, but maybe it'll be earlier, I'm not entirely sure, but we'll be reaching out in the near future to set the schedule for 2025.
Right, that's correct, yeah. So we'll reach out to the AFC members about setting up the new schedule, which most likely will start with April meeting, but we may have to have an additional meeting, we'll have to decide.
No problem.
Thank you.
Thank you. And that's it.
Presentation.
Now we have something else.
Okay, so
My phone again.
We should